Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review. So the last 2 weeks it was kind of a mini crash in the market as a whole, especially the things that had been holding up well. And you had the S&P down, I think, more than 5% each of the past 2 weeks. And this week so far, I'm recording this late Friday morning on June 24th. Things are bouncing back 4 or 5%, something like that. I haven't checked the latest numbers, but we're up big today. It's been a pretty good week. Overall, that's not enough to really do anything with the primary evidence. Okay, the intermediate term trend of the indexes, of growth funds, of most growth stocks, in the longer term trend too, they're all pointing down. I think coming in today, we're still at something like 80% or even 85% of NYSE and NASDAQ stocks below their 200-day line. So clearly, it's still a bear phase in stocks. That said, there are a couple of things that I'm picking up on. One obviously, is the commodity break. There's a couple of areas that are kind of holding up there, and I'm not saying longer term. I mean, I would definitely take action on them. I wouldn't be complacent, but I'm not saying longer term, oil stocks are about to go down another 70%, anything like that. But with that said, those have broken and probably topped for the intermediate term, number one. Number two, the leaders of this bear market, so to speak, have been the growth funds, the ARCs, and all that stuff. And they did not confirm a new low last week, which I mentioned in the video. And now we've seen some buying here. And it's just become easier, not easy, it's not easy, but it's become easier to find some stocks that have hit at least near-term higher lows like May and June, if not, 2, 3, 4 month kind of bottoming patterns and stuff like that. And there's a couple of sectors like biotech in China that's starting to, had that pattern and starting to perk up. So is it a huge deal? Should you go out and do a lot of buying? No. I mean, it's just a potential, maybe some changes in character that I'm picking up on. And we'll just see how it goes. Okay. In Cabot Growth Investors model portfolio, we're still hugely defensive, like almost 90% in cash. If this keeps up and the market can kind of hold its gains and maybe see a stock actually break out above resistance, what a concept, and hold those gains, I might put a couple of toes in the water. And yeah, if the market just falls apart, you'll take a couple paper cuts, but you always want to stay, ride the bucking bronco, so to speak. Right now, I'd say the evidence clearly is mostly negative. I'm not trying to make too much out of it. But, it's been a couple of weeks now, especially in the face of that mini crash in the market, where you're starting to see a little bit of a change in character. Let's just see if that continues, okay? All right, let's hop into the charts. As usual, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. Another small change in character as I speak today, I mean, who knows what happens, is, all year, really since the top, the NASDAQ and the growth funds have been the worst. When I look at all the indexes, usually you'd have maybe the the small caps or the New York Composite here on the chart, but the NASDAQ would still be down here somewhere. Now it's kind of reversed. So the NASDAQ, not positive. Again, not trying to make this out to be some huge market call, but it's actually at the 25-day line as I record this, again, late Friday morning. Technically this index, which is not, we look at more than just the NASDAQ, but if this kind of kept going next week, you could get kind of an intermediate term buy signal, at least green light, I would say, from the NASDAQ. Again, that's not enough just for us, but just sort of interesting to note. Now, if you do look at, you broaden it out, here's the S&P 500, still below the 25-day line, below the 50-day line. You can just see the severity of this. That's why I call it a mini crash. I think it was down like 12% in 6 days or something like that. And now it's kind of bounced halfway back. So we'll see how it goes. Same thing, New York Composite. Of course, the banks have been hit hard. Energy, commodities, those are obviously more New York than NASDAQ. But you can see still kind of buried. And looking at, small caps, mid caps, they're kind of in between. Small caps, you can see not terrible, kind of where they were in May, but still below the 25-day line. Mid caps, work to do. They look a little bit more like the S&P. So intermediate term trend is down. Longer term trend is still down. But a little bit of a shift under the surface of what's leading the way down or what looks worse, okay? On that note, if you look at this is the IPO fund from Renaissance. This is kind of part of we call it the growth tides, which is sort of something we come up with this year just to be a little bit more in gear with the growth stocks we tend to focus on. And, again, I mentioned last week, just didn't really confirm the low, and now it's pushing higher into the 50-day line. But Mike, 50-day line, couldn't it just hit the 50-day line like up here and die? Yeah, of course. Maybe we have another leg down starting next week and it's, you're hitting the golf course for the summer. We'll see what happens. But, this is a little bit of a change in character. And again, if you go back and look, these were all kind of like little lows in the market that, some of them were a bit higher than others, but this was leading the way down the whole time. Now all of a sudden, when the market collapsed down here, this one didn't. Is that the be all end all? No, but it's just something to note. ARC is sort of the same thing. This isn't something I watch totally closely, but again, kind of in this bottoming thing, running to the 50-day line ahead of the market indexes. Okay, not everything looks great. QQQJ, which actually is one of my favorite sort of growth funds, but it is back to the 25-day line. IWO, which is the Russell 2000 growth, back to the 25-day line. So, we'll see how it goes. More work to be done, but a little bit of something just to pick up on there. Okay, in terms of other indexes, as I look at my notes, sort of on that same note, here's biotech. Again, look at the weekly chart. I mean, you look at the monthly chart, which I've shown you before, but, you have this decline and then you have, a few weeks at the bottom. Is that decisive? No, it's just a few weeks, but, it is, again, a mini change in character here, maybe, where you have sort of not confirming the market and now thrusting above the 50-day line. We'll see how it goes, whether this can persist, but every week that it can persist or hold up, the better. It's probably going to take some time. It's not just going to be off to the races, but so far, so good. On the flip side, just to show you what's going on in the rest of the market, I mean, here's, the banks. This is the XLF, but I mean, it's still below its May low, even after a huge rally so far today. It's up more than 3%. Same thing, transports. They've had some help from FedEx, but still kind of right at its May low. And then you'd think that, this is kind of interesting, you'd think that chip stocks, this is SMH, would be acting more resilient since you're seeing some of the growth stuff being a little bit more resilient lately, but not really. It's actually still below its May low. So, it's still very much a mixed bag out there. I'm just trying to bring some things I'm seeing underneath the surface, because that's how things start. They start with one step at a time. It's not just, boom, everything starts going up, usually. So we'll see how it plays out. In terms of individual stocks, so I wanted to talk a little bit first, or just for 30 seconds, on commodity stocks. So this is Marathon Oil. You could pick any of the leading oil stocks. Hey, Mike, what do you think about oils now? They're paying dividends or they're whatever. To me, they've topped intermediate term. I mean, you have a huge, huge run. You had this thing where you kind of went out of trend on the upside here a few weeks ago, which is not a perfect indicator, but it tells you it's a little like intermediate term overbought or longer term, too good to be true sort of thing. And obviously, just this huge meltdown, 30% in 2 or 3 weeks, is intermediate term abnormal. So I would be surprised. I'm just using MRO as an example, but you could pull out most of them. Look at any chart. I would think you could bounce here. I'm not predicting that, but I think it's a pretty good chance you could get a bounce, and it could be a pretty good bounce. But I'd be surprised if you're just back up here in 3 weeks type thing. My guess is that the group has had its run for now. I'm not there yet with they've topped for the next 9 months type thing. I don't know. I'll see how things play out. Maybe they have, maybe they haven't. I wouldn't be opposed to commodity stocks going down the tubes and the money going into growth stocks. But that's just what I read on the chart is, intermediate term. There could be some support down here. You could bounce, but you've probably hit an intermediate term high, and it's going to take some time to repair the damage and just to, digest the huge gains that these stocks have had. Okay. Beyond that, I would just say it's similar or worse for most other commodity names. So this is Starbulk. Again, just using it as an example, SBLK. Big picture, it really hasn't come unglued, but just kind of a failed breakout and, not a lot of progress here, and it's kind of under pressure. And then you look at some of the metals stocks, like this is Alcoa AA, which again, huge run, topped out a few weeks ago, and now it's down 50% in, 2 months basically, or something like that. Freeport McMoran, same sort of thing. FCX. I think I mentioned some of these. You were seeing more of these. Here's this Nucor. I mean, again, I'm not saying Nucor is going to 40. I mean, I'm not making any proclamations here. I'm just looking at the charts now and just saying the commodity space has been thinning out for a while, and I think now with energy names, I think clearly hitting an intermediate term high, and that will probably hold for a while. That's a character change in the market. So just something to be aware of. I will say on a more positive note, or maybe positive note, if you disagree and you think, hey, this is it, commodities are going back up, I do see some relative strength in the commodity space still with some coal stocks. Like this is Arch Coal. Doesn't look great below the 50-day line, but you can just see when it's a very volatile stock, but you can just see it's really just kind of in this range here, and a couple of good days, this thing could be close to new highs. So if you wanted to play something, maybe take a look at the coal sector. Same thing. The numbers are huge, cash flow, all that stuff. But that's just something I've noticed. So just on the commodity front. On the growth front, here's just this is kind of more of what I'm seeing. Again, it's not all over the place. I don't want to overstate it. but this is Bumble BMBL. Again, the stock on the weekly chart came public right when GameStop was a meme stock sort of thing, and it got crushed. But really over the last, probably since then, it's been building this bottom, and now it's got this sort of, I don't know if you want to call it a bottoming formation, but it hit a low here, much higher low, big volume buying twice on earnings. And then again, when the market had this mini crash, look at the S&P, like I showed you. When the S&P is doing this, okay, this is the spiders, but it was like 12%, clearly to a new low. You have stock like a Bumble. Don't get me wrong, it got hit. It was like 34 to 26, but in the big picture on the chart, it's kind of just very well controlled, actually held the 50-day line. And you're not that far from here. And one of the things I'm going to say on basically every chart is that I'm showing you here is, you have some of these stocks that are ready to attack, could be ready to attack overhead resistance. Doesn't mean this thing's going to, $50 next week. I just mean $30, $34 or whatever, 200-day line, whatever you want to, wherever you want to draw your line, it could be ready to challenge that. So far this year, which is totally typical for a bear phase, breakouts of either all-time breakouts or multi-month or whatever, key resistance, sellers hop in there real quick and the stock maybe it has a good day, maybe it has two, and then it dies. So even if you don't buy these or nibble on them or whatever, just keep an eye on them. They should be pretty good tells. Obviously, if it just melts down from here, all bets are off, but a lot of these things are going to be challenging resistance. So just running through, this is Intracellular Technologies, this is ITCI. It's been resilient most of the year. It did get hit here, but it's pretty tight. It looks sloppy, but if you look at the weekly chart, it's actually been fairly tight in here. I don't want to say tight, but you can see it's just a lot of closes in here. Can it attack this? I don't want to give you specific levels because they're not that important. It's not like 60 versus 60 and a half is some huge thing, but can it attack this area and really break out, or does it kind of nose in there and just get crunched? Okay. Neurocrine Biosciences. Again, this looks more like the overall biotech group, topped way back here on the weekly chart. Boom, 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 but kind of a, higher low here compared to December. I guess that was January. And it's actually etched this sort of low level. I don't want to say this is like a great base, but you can just see during this mini crash, the stock got hit, but nowhere close to its prior low. And now it's again approaching this sort of resistance down today. Can it break out above 100? Who knows? Can it hold? That sort of thing. Funko actually has broken out, which is one of the first I wrote today that's like seeing like a Yeti. You can see on the weekly chart, big run. It's been base building forever. Nice support in here. Started to come alive a month and a half ago. And again, same sort of pattern. Here's your whatever. Here's your May low. Here's your June low way up here. You're going to see higher lows. And I think it got upgraded this week. So you've had a couple of good days here. Can it hold? Does it die? Something to watch, okay? LPL Financial, I think they mentioned this last week. This is a little different. It's financial and all that. But again, here's your pattern over the past 3 months. It's popping today. Can it sort of attack resistance and get above it? I mentioned Dynatrace just as even some of these real beaten down names. Again, you're not, when you have this sort of decline, one little higher low usually isn't enough. Usually, who knows, to turn the tide. But, you had big volume support right at the bottom here. And you had this rally above the 50-day line here. And then as the market fell apart, yeah, it got hit, but nowhere close to its nadir. So it just raises the prospects like, hey, is this done going down for a while? Are we seeing a change in character? Okay. End phase. I've mentioned this before. It's getting hit today. Again, the key will be as these things approach resistance, can they get above it? But that's kind of a structure to watch. And then you have some of these. So then you have Chinese names. This is Li Auto. It's very liquid. It's a $40 billion market cap almost. And you can see it's just been kind of a new name, gone through the ringer, but had some bottoming action. And now it's just kind of smoke up a chimney here the last few weeks as it actually does break out above some resistance. Can it hold? Chinese stocks, trust me, I get it. Not exactly the most stable. It's not exactly like a CD at a bank, okay? But, probably going to pull back, right, at some point. But can it pull back reasonably, hold, moving averages, catch up, that sort of thing? Just to show you what the group kind of looks like. This is Alibaba on the daily chart. The low for China was back in March. And obviously they've had a huge bear market. And now they're starting to perk up here. Stronger than U.S. stocks as a whole, but we'll see how it goes. And just two more. CrowdStrike, I think I mentioned this last week when we flagged it, just saying, hey, this thing hasn't really gone down since January, whether the market has. And now again, you're just trying to pop above the 50-day line, not the be all end all, still got resistance, still got the 200-day line, but you're just trying to watch these things day by day, week by week, seeing if there's a little bit. It's unlikely where they're all just going to start gapping up 25% on earnings and it's off to the races. They're going to start changing character over time. So maybe we're starting to see that here. And last but not least, same thing, Shockwave. This has been on my watch list. My question with this is it had such a big run. I think the breakout was somewhere here, like the pre-pandemic. It just had such a big run. Does it need just more time, sort of thing? But there's no question you had big volume support here. This was just an index addition. I would ignore that. And on the daily chart again, market gets mini crash, much higher low, held this low, and now it's already attacking, multi-week resistance. I wouldn't say this is the be all end all, but just how do these things act? I'm not saying you got to wait for everything in the market to be up, up 70 points before you buy anything or whatever. And we might do a little nibbling next week, but if things can hold together. But I think some of these things, these are just a handful of names. If some of them can kind of pop out of there, number one, you might have a leader on your hands. And number two, it could be a sign of a changing character in the market. That said, so that's some of the good news. That said, I don't want to overstate it. For all I know, where we close today, we can close down on the day. And even your best major index, the NASDAQ, is only back to the 25-day line. And it's still whatever percent off its high. It's below the 50-day line, way below the 200-day line. So for the most part, you still want to be heavily defensive. I'm just seeing a few things out there, maybe mostly in growth land, that are interesting. And if you're hugely defensive like us, we're as defensive as we've been since 2008, 2009, maybe put a little bit of money to work. But I'll leave that up to you. Overall, I would say it's still time for defense. But I would just encourage you, most important, whether you do a little nibbling or not, what's really important is just keep your eyes open, stay in touch. Now that the market's down 30%, now that everyone thinks the Fed's going to crush the economy and recession and inflation, now is actually the time when you want to stay in touch, because the market's, remember, is looking ahead to November and December. It's not discounting today. It's discounting 6 months from now. And maybe, if we're lucky, but maybe in, going forward, it's going to start sniffing that out a lot sooner than the news will, okay? So right now, still defensive, but we'll watch to see how some of these rays of light play out. Okay, that's all the time I have for today. Thanks for listening. And as always, come by again next week for another Cabot Weekly Review.